All the techniques that I'm teaching here, everything in my book have come from years and years of research. Every pattern I have has been confirmed by either two separate Japanese books. I had a bunch of books translated from Japanese to English. So two separate books had to corroborate the same pattern, or a book and a Japanese trader. When I was doing my research in the 80s, this was before email, I had to fax back and forth to Japanese traders. And it was fun. The Japanese are funny because I do everything by committee, so I'd have a whole bunch of questions. And it takes them about a month to get back to me. And they say, we think, they do everything by committee. And they'd come back with pages and pages of information. But the point is that all the patterns that I teach you in my books have been corroborated by two separate sources. In fact, one of the traders I knew at Merrill Lynch, Japanese trader, his grandfather used candlesticks in the early 1900s. He was a real valuable resource. So just be real careful. I think you're going to be in a real advantage because even if you do use the so-called scanning stuff, you'll know what's a good signal and what's a bad signal. We were talking before, if you get a window, I'm sure that's going to be right because that's a clean-cut definition. A window is a window. But if you see something that's called a bearish engulfing pattern, black wrapping around white, at a minimum, make sure the trend is right. And remember, got a lot of this here. And remember, I don't care how good the pattern is, the candles are a potential, they're, in my opinion, a necessary condition for the trade, but not a self-sufficient reason for a trade. Okay, you see the difference? They're one of the criteria you should be looking at, but in and of itself, it's not enough of a reason to trade. They are in and of themselves a reason to exit a position. Okay, but if you're going to initiate a new position, it's not a sufficient reason for it. Okay, so let's go through these quickly, and then we'll go over some markets through my eyes. We'll be doing more what would you do here, because I think that's where we're getting all the valuable information from a lot of hands-on stuff, and that's what it's all about. So we'll go through this pretty quickly. What pattern do the three candlestick lines at A, B, and C form? An evening star, right? You should be getting this pretty quickly. Okay, now let's get to the important part, trading with it. Would you sell short at A, B, C, or none? And, okay, how many say, would you sell short at A? And I don't want to see any hands going up. Okay. Now, isn't A at resistance? Okay. Now, if this was a bar chart, resistance is resistance, right? And it closed at high. It's at resistance, so one of the trading guidelines is looking for support resistance. Okay, so it's at resistance. But what are the candle lines telling us? The market's at resistance, but is there anything showing us it's stalling? No. Okay. Now, how about selling at B? And let's break up selling to sell short, selling to liquidate longs or selling short. How many would liquidate longs on B? Yeah, and I wouldn't disagree with that. I would probably get out of some longs. How many would sell short? It's a spinning top. It's a small real body, right? No confirmation. What else? What about the highs? New high close. Very, very important. So I would not be disinclined to lightening up on long positions. I would still probably say 75% long, though. I like the new high close. Okay, now we have an evening star. Okay, it's the evening star. What else also happened? Forgetting about the candlesticks. Remember, this is what's great about the candles. You can use all Western charting techniques. You don't have to use candlestick signals on the candlestick chart. An opening, gap down. But even on the opening, let me ask you. The market opens here. It gapped down between the prior session's close. Okay? Would you sell on the opening here? Okay, how many say yes? Okay, why would you sell? Sell right on the opening.
That would be the confirmation that some people would be waiting for.
Okay, confirmation. Let me just repeat the question. He said the question is the answer is that would be the confirmation we're waiting for by a move under the real body because this was a higher close. Is that what you're saying? Okay. What else? We have the microphone. Again, the question is we don't know it's going to be a black real body. Would you be selling on the opening? And who else said yes? And just like to know the analysis. Change their mind. Okay. Yes, go ahead.
Could that candle be considered a piercing because it's piercing the white candle, maybe not,
You mean,
I would-
I mean a dark cloud cover?
okay.
A dark cloud cover, yeah. Piercing pattern is the market's moving down a white candle, a black candle getting into it. A dark cloud cover, market's moving up, and then a black candle, right. Okay, so
Okay.
dark cloud cover.
I would sell it once it broke the halfway of the candle, the white candle, I would tend, from what I know at this point, which is minuscule at best, well, I know a lot more than what I did, thanks to you, that's where I would short it and put my stop at the high of that particular candle.
Okay, all right. Okay. The question is, would you sell on the opening? And then we'll get back to just one more response. We're going to get to other charts. We don't know it's going to be a black candle. Would you be selling on the opening? It did move under the real body. Selling short.
From your comments earlier, you could take a stab at selling short on the open with a tight stop, thinking that maybe if it continues to drop through the day, you've got a head start on it. If it doesn't, if it goes up, then you get out quickly. What I would like to see is a close below the high close to confirm, which would also make an evening star. The other thing you could think about it is, as it comes back under resistance, that's a crack and snap formation.
Right, right.
Yeah,
That's
so-
the last thing. Actually, again, it's backwards. The crack and snap, crack and snap is old resistance, break it and snap. This is falling off the roof. Remember, let them climb the ladder and let them climb the roof and then take away the ladder.
Oh, that's right, yeah, falling off.
Falling off the roof, resistance,
Yeah.
resistance, resistance, the market gets above it. And that's
Yeah.
exactly what I would be looking for here. That is why I would not be selling short on the opening. Because if when the market opens here, and again, this may not be a very straight line. I'd probably make it a zone like this, okay? When the market opens, where is it opening? Right at support, right? Old resistance. If you're selling there, you're selling at support. So perhaps wait for an intraday move under there. As soon as the market got under this second line here, under here, I'd be selling short on that one. Any questions on this? So again, it always comes back to risk reward. Okay, what pattern is highlighted? Okay, we can just skip that. Chrissy will better know that. Okay, this one, again, getting back to the trading ideas. When would you sell short based on this pattern? And there's two answers, and there's one better than the other. Okay, so Jim mentioned after it broke the bottom of the box range. Why do you think this box range was, the bottom of the box range was holding a support? The rising window, okay. So that is one way. Let the market break under the box range, and that's the way I would tend to do it because, as Ken mentioned, we're going in the direction of the short-term trend. Let the market break out as soon as it gets under the box range. As soon as the market breaks under, well, actually, here's the bottom of the box range. Would you be selling short on under there, or where else would you be selling short? The window. I'd wait for the window. Okay. All right. So the short would be initiated here. Okay.
Resistance.
Right. Okay. So Laura's saying, how about? So there's two answers. One. Well, let me go on and continue on this, and I'll talk about what you had mentioned. So we would be selling short here because the market broke under the bottom end of the box range. It also broke the window. What price would say we're wrong? Whenever we put a trade on, there's always a price that says we're wrong. So as soon as the market closed under the window, what price? And we can't see the price. What lines would you use to say we're wrong on the short side? Yeah, 6. Yeah. Well, not the window. Once the window's broken, we forget about it. What should become resistance? I'm drawing the lines here for you. Old support should become new resistance. So I might make it, may make it up to there. So if I were short here, my stop would be here. And of course, now that we've defined the stop out level, that's only half of the equation. because we're short here, our stop is here, but that only gives us part of the picture. What do we need to, before we pull the trigger? A reward, a target. I think this would be pretty good here. Maybe a little nervous, a little support here for a couple of days, but I really don't see much support. I don't see anything really. Maybe over here, but this looks like a nice trade. Yeah. Yes.
One thing Ash told me, was that, take all the way to the bottom, that's split in half, and get happy with this.
Oh, yeah, 50%. What'll happen is, if I see a move like this, I will make intraday candlesticks. Because you may see, on this white candle, we saw it before, remember? We had like a tall white candle, hey, there's no support, but maybe on an hourly chart, it held support here for 5 or 6 hours. So when you see something like that, go to a shorter time frame. If this is an hourly chart, go to a 30-minute chart or a 15-minute chart. Now, getting back to the question, or the answer with Laura had mentioned, another option, in my opinion, a little riskier, is you could sell up here, because what should be, isn't the bearish engulfing pattern potential resistance, right? It's a very short-term trade, because if we're selling there, we have a tight stop at the top of the bearish engulfing pattern. What's our target? The bottom of the trading range, yeah, or the window. So the two answers are, you get sell on a break under the window, which is also the break under a box range, which to me I think would be a higher probability trade. But if you're a little bit more risk-oriented, okay, sell on rallies. And maybe what you could do is look at an intraday chart. As the market gets to near resistance, maybe on an intraday chart, look for a bearish engulfing pattern or a shooting star or something to confirm the resistance. Because just because the market's at resistance, what if it's at resistance on an intraday chart with tall white candles? We're not going to pull the trigger, right?
Steve,
Yes.
on that chart,
Mm-hmm. Good.
on that particular chart there, if you've got the bearish engulfing, it comes back up again, takes out the high, closes back into the range,
Okay, so it gets back.
up at the top.
Okay, over here we're talking?
Yes.
Okay.
You short it there, realizing that the bottom of the range is going to be resistance
Support.
or support, and you know where the defined resistance line is. Would it be wise, if you chose to do that trade, to give it a little more time to see what it was going to do? Because worst case scenarios, it just come back and stop you out, I would
Right.
think.
Well, what's nice about, if you did do this trade, it's such a clean stop, it's such a small area. What I would tend to do is let the market get to the resistance, and then as it, rather than trying to go counter trend, let the market get resistance, and you'll see this better in an intraday chart. Let it get to the resistance, and then even if you're getting a negative candlestick signal, if you want a little bit more confirmation, let it start turning first. And as long as the risk reward is still good, you could sell short on the downtrend, because then you're going with a very short-term trend instead of trying to sell short on a rally. Right. Right.
That whole range is very tight.
Yes.
Would you really read that bullish or bearish engulfing pattern as such, or it's not really an uptrend? It's a sideways trend.
Well, okay, for this this here. Oh, over here. Okay, this is not a bearish engulfing pattern, because although this is a black candle wrapping around a candle, what kind of candle? What does that first candle have to be with a bearish engulfing pattern? It has to be white. They have to be opposite colors. So the only thing I was pointing out here is that this bearish engulfing pattern here became resistance, and this was stalling at the resistance area. But this is not a bearish engulfing pattern. And even if this was a white candle, I would agree with you. There's not an uptrend to reverse. Right. Right. Okay. Why is the pattern circled in late June? What is the pattern circled in late June? Is there anything extra bullish? And I shouldn't have said extra bullish, but extra likelihood that's going to cause a reversal. And what's the pattern? I guess it's not perfect, but it's bullish engulfing pattern. Kind of, although the close is the same as the opening. But and I think Jim had pointed out, we had something like this before. It wrapped around, right? 3 black real bodies. Keep in mind, it doesn't mean the market's going to rally that much stronger. It just means the odds of return are very high. So don't get all carried away saying, I'm going to be really aggressive on this position because they're wrapped around 3 black candles. Okay, where would you exit if you bought in this pattern? And this is why I wanted to include this chart, because exiting is something that a lot of people don't look at, and so I wanted to. So let's say we did go long on a bullish engulfing pattern. The profit potential we say is up here. Maybe if you want to wait for a little retracement, you bought in the middle of the white candle or something like that. So let's look as time progresses. Okay. And you tell me when you would exit. Okay. All right, and why would we exit here?
Is it a higher close?
It's a higher close. And I guess, with a small real body, small real body, we'd probably get a little nervous, but I would say, let me say, when would you exit all your positions? Okay? So I would not use this to exit all my positions. Okay. I would view that as a doji. Okay. Okay. So would we use this to exit all our positions? Say we're out of some. Why or why not?
Is it a higher close?
Why? It's a higher close. So I would still be long. Okay. This is one of the ways people misuse the candles. They forget about thinking about the closes. And the same thing here, right? Although these are doji, I might get a little nervous because for a market to get going, I really like tall white candles. Doji are telling me the market's kind of running out of steam, but still the higher closes are important. So I would still be net long. I might be scaling back, but I would still be long. There's really nothing letting me know to be negative. In fact, what are the shadows showing us? Yeah. Every time the market sells off, it bounces back. So the small real bodies get me a little nervous, but the long lower shadows mitigate some of the bearishness. And that's why, by the way, I'm not that keen on hanging man lines. These are actually hanging man line. It's a hammer-shaped line that comes after a rally. And I really don't use those unless they're under extraordinary circumstances because the shape of the line itself is actually bullish, right? Long lower shadow. So I don't take much, I don't view it as very bearish.
Steve,
Yes?
if you were real nervous at that point, could you move your stop up under the...
Oh, I would have been, I would have been moving I would have been taking,
steadily coming up with the stop.
Right. Now, and let's say we're here, and this is the best way to have stops. If you're watching the market like this, where would we, after this action here, where would you place a stop? We're still long, looking at the last 3 or 4 days action. Where would you place a stop?
What is that?
And I know we don't have numbers here, but...
The white candle with then you got the little candle beside it.
Okay, so now we can do numbers. Okay, so we were at the doji here.
Back further to the left. Keep going.
Here?
Right there,
Okay. And where were under here?
under the shadow.
Okay, over here. All right. I would tend to, and a lot of this is subjective, okay? But what I like to see this to me is a low, but how many times was it tested? None. How many times was this tested? 3 or 4 times, right? So I would be placing a stop there. Okay. The more often the support resistance level is tested, the more important it becomes. Okay, so as we move on, now it's a black real body, but it's still a new high close, and we'll just speed along here. Doji, but still a new high close. Okay. Spinning top. Still getting a little nervous because of the real bodies. Now, I would probably exit. I'd probably exit longs here. Why? No, because it's the top of the chart. I just realized it. you know it's not going to go any higher.
Oh, man.
Okay, I got to make a lot of these. Make these in the middle of a chart, so we don't know. So that's what you learned here. Get out when it's at the top of the chart.
I'm running out of money right here.
Right, that's right. I'm running money. Okay. How come everybody didn't jump? Everybody should be jumping now. Right, that's when he should be out. Okay. That's it.
That's good. That is.
And the bearish engulfing pattern should be resistance, and indeed it was. Yes. You have the mic? Okay.
Yeah, question that I'd had here is
when we first started this, where would the target have been set and how?
Okay, so we're over here. Okay, and let's say we bought either in the bullish engulfing pattern or middle bullish engulfing pattern. How would we get a target?
Yeah, instead of, what you're doing here as far as getting out is something I've been doing quite a while.
Right.
I've been starting with no target and just looking for an exit
get out,
on
right.
the way up.
Right.
Which you've told me is not the way to
Well,
do it.
right, I would
Now
get a target.
I don't see the target
Right,
starting.
and how would we get a target? We're here, if the market's here, how would we get a target? What's the only way, how could we get a target? You have to go back. You have to go back, right. So that would be my first criteria, to get a target. And let's say the target was up here, I would use these doji to be out of over there. Or let's say the target is up here. I might say to myself, okay, although the market's making higher closes, the doji is near my target, I'm not going to wait for the last few ticks to get out. I'm just getting out now. But that's a very valid point. We should always have a target before the trade is put on. Okay, you name the two signals. That's obviously, we skip that. All right, we'd use these signals to sell shorts or liquidate longs in Y. Very similar to our other chart, again with exiting strategies. Okay. Although those are negative signals, okay, what would you use the signals for? What's that? Exiting longs. How about selling short? And why not sell short? None.